Lesson 2. Forex Trading on Moving Averages. In this video, I will tell you what moving averages are and how to use them to determine not only the direction of the trend, but also to get a high quality trading signal. A moving average technical indicator is the average value of prices over a certain period of time, moving along with time. In the MetaTrader trading terminal, this indicator is displayed as moving average, or MA for short. Based on the definition of this technical indicator, it is clear that its interval can change, and as a consequence, a different number of price values can be taken into the calculation of the moving average. For example, a moving average with a period of 20 takes into account the last 20 price values. As a result, the higher the period of the moving average, the slower it is, because the change in one price value has less weight on the total value of the indicator. But as you know, each candle or bar has 4 price values: high, low, open price and close price. Therefore, any of the above prices can be taken into account in the calculation of this indicator. The most common type of moving average takes into account the closing price. Moving averages are classified according to the calculation method, but we will not delve into these aspects, since there is plenty of this information in the free access. But I will only note that I use a simple moving average, simple MA, taking into account the closing price. 3 moving averages with periods of 20, 50 and 200 are marked on the price chart. All of them are marked with different colors and signed. As you can see, the slowest moving average is MA200. In green and is located above everything, since it is formed taking into account 200 price values. As a result, each new value of the price has an insignificant impact on it. A little closer to the price is the MA50 and, accordingly, the closest is the moving average with a period of 20. Now let's learn more about what trading signals a trader can get using this technical indicator. The most common trading signal is the intersection of 2 or more moving averages. It is necessary to take into account the direction of the trend and the location of the current price value dependent on the location of the moving averages. At the moment, when the price reached the A mark, it broke through and fixed below the moving average with a period of 200. But the MA20 and MA50 were above the slower moving average, which did not allow the trader to enter the market, because the signal is considered unformed until the slower moving line crosses the faster one. In this case, the first trading signal will be the intersection of the moving averages with a period of 20 and 200. At point B, since only at this moment the current price value and the faster moving average MA20 are on the same side of the slowest MA200. In this case, below, as a result, the trend is downward. The current price value is lower than the average for the last 20 and even more than 200 periods, which indicates the ability of the price to continue falling within the main trend, which is bearish. The second trading signal that has more weight and is considered the most reliable is the intersection of the moving average with a period of 50 and a slower MA200 at point C, since only at this moment we get the fulfillment of all the conditions. The location of the moving averages from the fastest to the slowest, and of course the location of current price value under the fastest MA20. In the next video we will combine the first 2 indicators and see how they work in pairs.